and trying to see what we can do for the night. We gonna see what the market plan to give us for the night, and if it's something good, then we gonna get to it. If not, then it's just gonna be what it is. What happened right here? I don't even know. Did we already start? Yeah, we had to. Or that meeting info. Copy that. Let me get over here. We about to get up. We on. What else? Well, yeah, we'll turn like a movie, man. Getting ready to get active in these markets. Turn all the way, turn up, laugh, bumming that dog. What I'm doing? I don't know what I'm doing. Where I'm at? What we need to do right here? More. Recording in progress. Yep. Okay, that's gone. We need to pull this up, and we can get to it. Coming in hot already off top is AU. Been looking at AU all week, as you know, during the Asia, because that's how I get active. Looking at that thing on a daily. We was kind of expecting a deeper retrace, but at this point it has not provided that type of information. The information it has provided is that it wants to go bullish. With the information that's provided that price action wants to go bullish. So when we go down to that 4-hour time frame, what we can see is price action created a low in the market within this bullish trend, and it has just now created a new high. We have already pulled back on the 1-hour time frame, breaking the first lower time frame structure level, you want to call it, and now we're pulling back into that 4-hour high resistance. Ultimately, I would love to see price action keep going bullish, because we got a nice little range up to the top side where the next resistance is like right up here. Looking at about close about 50 of them things, and then if it push all the way to the top to fill this wick, and you looking at about 70 of them things. So, I think the risk to reward be a lot greater to the upside. But if we only stall out at this 4-hour high and then come back and break this, I would call it a 1-hour support. The 1-hour support, 69, 618. And potentially we can come back all the way down to this 4-hour resistance level and give it a good old tap on the downside. So what's up, bro? What we gonna do from down here? So when you add that analysis back, let me see, we're gonna spread them out. What we can see, 4-hour support, 4-hour highs, created in the London session. My first and immediate trade setup after identifying the 4-hour lows is to see what type of retracement we get from yesterday's NY session. NY session, 4-hour lows, 4-hour highs. For one quick moment, we are going to blank out this low. And what you can see is price action pushed high, created that NY high. And what I immediately was waiting for to take advantage of these shorts was to see what type of retracement I was going to get back to the downside. And what did I just do? Nope, cancel that. What I got was price action came down. So we was definitely shorting from up here. Where did I target that area? Oh, yeah. So targets were right down here, so because that was the structure, the 4-hour structure that we had most recently broken was right up there. So that's why the targets was there. The only really tricky part about it was the stop loss. I knew there was a high potential for price action grab liquidity right up here, coming from that Asian session, so I didn't know exactly where to put a stop. So as you can see with this trade here, the stops was way up here at first, and then as price continued to make lower lows and lower highs, then eventually got trailed and then put in the stops, and then TP was smashed. So yeah. And then coming into NY session today, what I was looking for was let's see if I can pull it up. We hit from that low to that high and drag them over. I wanted to see where price action pulled back. So the first time it pulled back right here, I got in First trade was it. Bang, bingity boop. And when it came back down, I waited to see what we was going to do at this 1 hour support right over here. As we zoom it on in, I wanted to wait and see, okay, if we broke this level, how far do we come down before we start to go back bullish, if we're going to go back bullish. And it wasn't too much below this 50% level. If you add a bigger fib with more levels on it, as you can see, we did not break the 618. So I knew potentially if when we came down here 15 minute, when we started to print back bullish on the lower time frames, if I wanted to take a trade, my stops would have been below the 618. And what happened was the first trade got in right here. Second trade came down. I waited for it to produce this here, and then I got in another trade right over here. And then once it came back down and started that support right over here, didn't break this NY low, I got in over here again, and then it went on to the go into the go on. I only have one running right now. Everything else I closed out around about 4 o'clock because I knew it was close to market close, and I wasn't trying to pay no swap fees, and had a potential of it just pulling back and losing the profits that I made for the day. So yeah, so now what I just move, go back. Now, what I'm looking and waiting to see is, get rid of this field. We can close that up. So you already see pretty much, we can pretty much delete this. And we'll leave right over here. This entry was based off of the candle closure right here on the 15 minute, and like I said, the stops was based off higher time frame. So that's what it was for there. So as we can see right now is price action has closed above that 1 hour resistance. I'm gonna put this level back. Yep. Price action has closed back above that 1 hour resistance and pushing into that 4 hour resistance. It is now the Asian session, and I don't know if we're gonna have the gas to get up through. We're gonna see. But if it does, to the top of this 4 hour zone, 16 pips, and then all the way back to that higher time frame resistance, 30 pips. So we're gonna see if we do higher highs and higher lows. Now, if we get a break and push into this level, that retest trade from there will be sort of risky. So yeah, we want to see how price action reacts once we get back up into this 4 hour low. Higher time frames, we big bullish. What I'm expecting, or what I think could happen, is based off of the 1 hour time frame, we come up and we look to fill this wick. So potentially we could push all the way back into this zone. And then if we are able to close above this 4 hour resistance with a wick at the top and like the closure of the body, like right down here somewhere. But I need to have a wick on the top to be able to be confident in the buys going back into this level. But come over here, fill this wick, or even close above, like right up in here, then pull back. Something like, probably like right up in here. And then I would probably buy back into that higher time frame resistance. But yeah, a lot of it, a trade setup for me tonight would depend on how candles start to close here. Within the next hour or two, around about 9 o'clock, we should have a little bit more evidence. Two more hourly candle close prints, and the close of the 4 o'clock candle open up the next 4 o'clock candle. But yeah, what's going on in the world? Did horribly today? You was on that.
Like, I had the right idea. Like, I would have first trade. Well, the first time I got in was like around 6 a.m. I think.
Yeah.
And if I would have stayed in, I wouldn't have gotten.
What were you trading?
NAS 100.
NAS 100 for.
At the very bottom, and then I got all scared and I jumped out.
Okay, let's see.
Back in,
NAS 100
Yeah.
is 6 a.m.
Stop loss
So you was
around.
about right up in here. Okay.
Yeah, that's exactly where I got in at 6 a.m.
Okay, so looking at this off the hourly chart, if I'm sitting in here and you drop your um, chart in the group chat, first question, why? What made you buy right here at this point?
So I think it was when I got down to the 5 minute, I saw the evil bottom. And I got in.
Okay. Well, not to say that your analysis is wrong. I just would like to know from your perspective what you was looking for, like what caused you to get in, so I could see the trend starting to shift, breaking structures looking left. So any potential pulls and pullback, if I was expecting this to continue to go bullish, from a higher time frame perspective, then yeah, I could see price action picking up gas, pullback, breaking highs and higher lows. Ultimately, I probably would have waited for this move right here, because if this was where price action potentially took off from, I'm always expecting a retest of that level before we really, really, really advance to the next level. So, yeah, this was a good entry, but this would have been your better entry, and then you would know to have your stops right below there, because if you broke below there, potentially he's gonna keep going down. But as it came back, then you had another opportunity if you got stopped out right over there once it started to break highs again. If you still believe that it was gonna go bullish, but yeah. So you got in right here, and then how far did you let it go before you hopped out?
Not far at all.
Not for.
Not far at all.
Yeah, I mean, if you let me see, wrong position.
So
You got in like right
what I
over
did
here.
was going up, and rather than just leaving it, I moved my stop loss up to where it's even.
Okay, I got you. Yeah,
Yeah. And then that's when that whole liquidation thing happened.
this right here. Yeah.
Yeah, that right there happened and took me out.
Okay. Yeah, yeah, yeah.
Yeah.
Ain't nothing wrong with a break even. A break even is way better than a loss. I'm telling you from a little experience. I take a break even any day. But
I
so
didn't touch it. You can just imagine, like, I would have went all the way up there.
right, yeah, you had a pretty good analysis. Yeah. See, and then that's the thing that helps you, like you were saying yesterday. How did I know to hold a trade? Well, now you know. Okay, well, I found me a level where I knew, I identified from my own chart analysis. I went in the charts and I saw something. I was like, okay, well, I'm gonna identify this level. And then if price comes to this level, then I'm gonna get in. So then next time when you come to the charts and you say, okay, I identified this level, and then I see it. This is the same way it's set up the last time, so I'm gonna get in this time. But this time, you know, I'm gonna hold, and I'm gonna stick it out just a little bit longer just to see how it play out, and if it can get to that target where I was looking for. And then eventually over time, like I said with that AU trade, when it dropped from the top and it started consolidating the Asian, I didn't have no issue holding because I hadn't seen that price action before. It's been plenty of times I didn't seen it, come up here, grab liquidity, and then come down and consolidate before going down. Now, granted, at this time during the London, I didn't have to actually sit and watch it. I had stops above, so if it would have came and stopped me out, it just would have stopped me out for a full stop. But it went where I thought it was going, so made profits off of that trade. So the more and more, you stick to your charts, you stick to the way you analyze and mark up the charts, and that's how you definitely build that confidence. And then the way you get better, if the trade would have continued to go bearish, is to say, okay, well, from this level, this time I thought it was going to go bullish, but it didn't. It went bearish. So what can I see, or what can I look out for next time to determine if price action is going to continue to go bearish? So this would have been one of the things. As price action left this zone, we came back. Now, if we would have broke through this level and seen it come back to retest right here, that would have been one of the things I'm looking for next time. Do we break through the level where the support is and then come back to retest it to continue going bearish? So, but right here, overall, yeah, you did good, but hold on to that thing. But what time this was? Yeah, and this was one of the things I was saying. Last time we were talking about this as well. You see the time, right? Especially on NAS, the NYSE open, that price action go cuckoo, cocoa puffs. So
Yeah.
Yeah, if you know that,
So it's best to not trade until that's done.
or just see what happens at that time. See what the if you expecting the market to go bullish, and you kind of hopped in from down here, or you looked at the charts around this time 6 o'clock, and you saw price action come up to this level, and you got that big bearish engulfing candle and continuation candle after that, but it didn't necessarily break through your support. And then it started back breaking highs on the lower time frames, 5 minute, 15 or 5 minute, 15 minute, started back going bullish, breaking highs. Yeah, eventually, I mean, potentially this right here would have been my first indication that, okay, we about to, go back bullish. I probably would have waited for a retest, but as candles would have continued to break the next candle's high, I would have just hopped in. I would have kept my stops down here, and then, we broke this candle's high with this candle, we broke this candle's high with this candle, we broke this candle. So eventually, it just keeps breaking highs. I'm going to just, take my chances and get on in. We were already bullish from the higher time frames, and that was the analysis anyway, so, yeah. Grayson. No, sir. Hold on one second. But yeah, um, you like to just trade it during the New York session?
Um, I need to figure out what I'm gonna do honestly because I go back to work September, and I don't know how do you trade while you're at work? How do you see?
I had the levels marked up from the Asian session.
Oh,
Yeah,
just through your phone?
yeah. I pull the app up, the Trading View app, and look at the levels and see where we at. And then I go to I got a broker like my app. I got the what is it traders MetaTrader and Hugo's Way was one of my brokers in there. Henko Trade, I trade with them too. So yeah, I just pull it up on the phone and get active. But yeah, like I said, if so, with I knew this morning if I came to the charts and this 1 hour support had not been broken and we started and the price started to create bear bullish structure on the lower time frames, I knew I was going to buy from down here. So the first time, and the one of the main influences for my trade this morning was when I had this fib up here. Like I've seen when the setup I'm gonna go to when I see the New York session create a low, then create this massive high, and then closes and goes into the Asian session without a retracement. This is the classic setup I'm looking for. How far is it gonna pull back? The New York session created the low and the high. So during the Asian session, I'm looking for the retracement trade. So then, as I got the retracement trade last night, I knew we started at the 50. We pushed away heavy. We pulled away heavy from the 50, but we came back to retest it. We kind of closed below, which I wasn't really nervous about because I said once we start to create bullish structure again, then I'm gonna be ready to hop back in. So, yeah, I knew that from down here it was gonna go. So, they that seeing certain like some people say they trade the patterns on the chart, like double tops, double bottoms, triple tops, head and shoulders. These are the patterns that I trade. Like I've seen, like I said, price action create this low and this high, and then retrace. It usually is going to come back to the 382, or it's going to come back to the 50. So when we came back down to the 382 and we just shot through that level, I knew it wasn't time to buy yet. So I was waiting again at the 50, and then yeah, I had a lot of confidence to hold this because I'd seen this type of price action before. So as soon as it came down, then it started stalling out. Let me in, let me in, let me in. And today, I had confidence to get in the trade, but I didn't have enough confidence to put like a lot of like I didn't over leverage. I just put my normal lot sizes in and they just took off and I was like, okay, yeah, yeah. So next time I wouldn't say I'll over leverage next time, but I would have the confidence to increase that lot size when I see this trade set up again. Yeah. And right now we just still pushing bullets very slowly, but it's almost 8 o'clock. So, um, yeah, let me see. at this point, it ain't, the trade idea is just to sit and wait for the most part. I'm still in positions from earlier, but outside of that, yeah, so positions I got in from down here during the Nordic session, the TP is like way up here. So we got about, what is that, 990? I don't know how many pips that is, like 5 or 6 pips before it hit TP.
The opening of the New York session, does that liquidity always happen?
What do you mean?
That how it made the high and the low?
This right? Oh, not always, no. But I know when I do see it formulate like that, then that's the setup I'm looking for. So what I would do is just like right back over here, you got the low and you got the high, and it sets up like that. First thing I'm looking for, fibs. Well, yeah, it depends. This didn't necessarily break structure, so I wouldn't have been looking for this to continue to go bullish. I would probably be looking for sales at this point, so that's not really a good example. It worked a lot better right here, or I trusted it a lot better right here because this NY low broke the structure looking left. You know what I'm saying? So, let me see. No, that's not what I was trying to explain. Yeah. Let me see if I can find a better example or another example. Well, they have two identified right there. Yeah, you probably don't have another one. So what time is this? This was in London, so yeah. London 2. What is this? It's a New York session. But yeah. I'm trying to find another place in the market where I've seen it push up like this and then come back to the 382 and the 50 and then push up more. But I deleted the charts already, or deleted and reanalyzed this, so all these areas over here ain't marked up anymore. Well, we had New York low, New York high.
Those I guess they're liquidity candles, right? That's what they call those things?
I would call this a liquidity candle. I would call, so far that's probably the only one.
Oh, okay.
Yeah.
So that long candle, I often run into those.
Which one? This, like this over here?
Oh, the other one that was the high and the low for
For the New York session?
yeah.
Okay.
So something like that just happens, and they usually come really quick, like shoot up really quick and then shoot down and then shoot up really quick.
On NAS 100?
Um,
Yeah.
yeah, that long one right there, that one.
Yeah.
So something like that always stops me out.
What you mean?
Direction correct, but
Because it comes up and then immediately comes right back down?
it always goes further than my stop loss.
I'm trying to. So you would have your stop loss put in, but it like closes below your stop loss.
Yep.
Okay, yeah. So you got slipped then. That's called slippage. Yeah, that happens from time to time, depending. Especially if you trade NAS. NAS is where you will see that happen a lot, like more often than not. It will blow through your stops, but it also will blow through your TPs. So you just kind of gotta. I guess if that's what you want to trade, you just kind of gotta accept that going into it. It will blow through your stops, but trades like this on nines, you just gotta be. If you sitting at the chart, you just gotta know when to get out, and then if you got like a limit order and you put it in like when you go to sleep or something, then you just kind of hope and trust you know that it don't come back down immediately to your entry or your stop.
Is it? It's right there.
Hold on one second. You said what? Appreciate you, little homie. Thank you, sir. My son don't know what he want to do with himself. Yeah. Let me see what the rest of the world look like. Get back to that 1 hour chart. Bitcoin is big bullish. Yeah, broke out of that channel again. So now we're gonna see how the channel starts to formulate to the upside. See if we can crack out some action on it. I don't normally trade Bitcoin to the weekend though, cause I be real tight up on AU. I like Bitcoin on the weekends. Now, off the top, off the rip, automatically how this channel is forming up, I don't like the way it's looking already. So I'm gonna be less willing to take this take channel trades. I'll just mark it up off the structure.
How long did it take you to get good at this again?
Well, the problem that hold on, local. Let me close this door so less noise coming in. Right. So for me, because of the way I came into the game, I was taught like how to read higher highs and higher lows, and they didn't really teach multi time frame analysis as far as how to read it from the higher time frames to the lower time frames. They just taught you support, resistance, supply and demand, higher highs, higher lows, lower highs, trend and stuff like that. So I always knew how to kind of read and identify the charts. I just didn't have no confidence in it because I didn't know if that's what I was supposed to be looking for or not. Because in the end, the people that I started with, they ended up being a bunch of frauds. So it was like, damn, I don't know if I can trust that information or not. So over time, it just took me watching other people trade and knowing or seeing them having success and knowing that if they trading from those levels and having success, then I need to probably, adjust my charts to kind of look, the levels that I'm identifying as far as, where I'm identifying the 4 hour level versus a 1 hour level or a daily level. So that's what I did. And then once I started being able to automatically come to my charts and not really have to wait and see how other people are still marking up and it started playing out, then, eventually it just started clicking and I just stuck with it. But, I started in 2019. So right now, I'm right at 3 years. So, I mean, it's kind of like, going to school, from first grade, second grade, third grade. It's just been over the years, you learn something new. And then another thing was with the way I came in, I started so wild that I was willing to learn anything. I was willing to learn indicators and all these different time frame and strategies and analysis and all that other stuff. So eventually, I just started to see, this right here about to be a waste of time when I click on a video, or that's about to be a waste of time just by how they come in and what they start talking about. So yeah, I just started to cut some of that stuff out because I realized it wasn't really working and it weren't worth putting it on the chart or taking the time to try to identify it. So yeah. Let me see. Delete. Drag this over. Delete back into that 4 hour. I think this might pull back one more time and then break this level. Come all the way back up here. So Bitcoin. So something like this, right? I don't trade Bitcoin throughout the week, but this is how I would be able to determine how I'm about to get active on Bitcoin. So I come to the charts and I see we bullish. We bullish on the 4 hour. We bullish on the daily. And then we bullish on the hourly. So I know that if we bullish coming into this 4 hour resistance and we just pushed into the resistance, I'm waiting for the reaction. Either I'm waiting for one big ass bullish candle this way or a retracement candle this way. If I get that retracement candle and I see on the 1 hour we're starting to build a support right here, this was the one we just broke. This was the one we just created. So the new 1 hour support is right up in here. We have the 1 hour resistance and the 4 hour resistance right up in there. So if I come back to these charts tomorrow, tonight, oh yeah, tomorrow is Friday, so yeah, Friday I will be interested in looking at Bitcoin and breaking it down and then analyzing it. So to Friday night, Saturday or Sunday, if the price action comes and it start doing this right here, and it pull back to this level, and then shifts and start going back bullish, then I'm getting active on some buys back to the top side, and then you got the range all the way up here. So this is how, if I don't trade something, this is how I plan it out. You know, come to the chart, start messing around, identify the levels, say, okay, well, if we just created the high and we create that high pushing into resistance, let's wait for that retracement and see how far we come back. We could come back, you know, all the way back down to where we broke out from, or from the support, or we could draw the fib zone and see if we get any fibs confirmations. You know what I'm saying? And see if price action come back down to the 50. Or if you want to see the 382, which is a shorter zone, see if you come back to that purple line and hold up that support before it goes back bullish. So those are the things I'd be looking for. I would leave something like this on the chart so I can see I wanted it to come all the way back down and then push up, but it only came back down to the purple line and pushed up. So at that point, if that's what happened was, if it ended up doing that, then I was waiting for it to see how it pulled back again. Then I'll get in from somewhere down here, or as it start to do this right here, I'll get in from one of these moves. Something like that. Yeah, so let's see. GJ. And it's 8 o'clock. GJ made it all the way back up where we thought we was going, and we just crashed to the downside. So if we break below, already got it identified, 162.985, then potentially looking for a retest and come all the way back down to 161.901. But we got to break below here first. You can potentially take sales from up here, but this is the 1 hour. I don't know how far this is going to pull back. And that's the thing about, you know, knowing your pair. Like coming and seeing this, if I traded GJ and I know GJ likes to pull back to like a 382 on the fibs, then, you know, and that's even all the way back to 50%. So, yeah, you can definitely, that'll probably work out tonight. It potentially could. It might manipulate up a little bit more, but let me see. The best way to get in this trade is just like how we got it in all the other ones. Wait for it to make, you know, a new low, pull back, and then as it pulls back, take a short from right there. You target right here first, and then if it come all the way down, then ultimate target is 161.901. And then, let me see, I'm gonna put that up there. I'm gonna come back and see how that looks. Short position. You can take it so many ways, but I'm gonna take it like this first. And then get active like that. So then I'll show you one of my charts while I was doing back testing on. So when I was trying to get my strategy tight, I had this GJ chart from when I traded GJ all the time. And I was working on my strategy back in over here. So these are all the notes that I had from one strategy. This is how long I tracked it. And whenever my setup occurred, I took notes on how I would have got in, or what I'm looking for next time when it comes up. How many times it played out, how many times I got stopped out, how much I got stopped out by, everything. I did this every night for like 2 or 3 months. Yeah. It had some success. It was a good setup, but it was mostly based off of just the way candles were printing. Like, so if, what was it? If we came out a certain way from the 8 o'clock candle to the 9 o'clock candle, then the setup was valid. We had a certain amount of pips for the stop loss. And then, yeah, that's the way it was. It was based upon if the 8:15 candle closed a certain way, the 8 o'clock candle closed a certain way, 8:30 candle closed a certain way. What I mean by a certain way is bearish or bullish. Then we was getting active. We always left room for a pullback. And, you know, Like I said, sometimes it worked, sometimes it didn't. It was all based off the Asian session. I only traded it during the Asian session. Stop loss, stop loss. Take profits, take profits. But you know, the key thing to take away from that is if you definitely trying to get tight with your strategy, this is the best way to do it. Come to the market. And I did this while the market was live. So I was sitting at the charts. I didn't take these trades, but as it came close to the time where I wanted to see what was going to happen, I came to this chart, set up the analysis, and then something like a paper trade, like a demo trade. I didn't actually put the numbers in, but I just put the buy or sell position thing on here and saw how it worked out. And then on the other GJ chart, I would switch to it, and then I would set up and see if I would take that on my live account. So this is what I would actually trade off of, and then I would run my strategy off the other chart. It's 806. Market ain't doing too much of nothing. GU. I think GU might pull back again, simply because we pushed up and created a high. This could potentially be the new higher low to push the market higher, but as you can see, we came back to the highs and we stalling out. So anytime you see this type of price action, you can always expect price action to come back again this way first, and then push bullish. So yeah, I would definitely be looking for GU to push higher. You got a resistance at 1.22, 115, and then the next one way up there, 22,905. So it look like the British pound picking up strength. Switch over to GJ. Was GJ pushing bullish? No, GJ is pushing bearish. So maybe the dollar is just weak there. So maybe all the pairs going against the US dollar is going to be pushing bullish. So GU pushing bullish, NU pushing bullish. AU, we pushing bullish, and we looking to see if we're gonna continue bullish. And then I don't really trade it. I don't got anything else against. Okay, let's see what UJ doing. UJ is bearish, so yeah, the dollar. I would say the dollar is weak. Potentially GJ is gonna go bearish tonight, and then GU is gonna go potentially bullish. AU bullish potentially, and then NZD USD potentially bullish. But yeah, see, this is a continuation sell zone. We see that break below that level. Wait for that pullback. And then once that structure starts to shift from that lower time frame, 15 minute, 5 minute, take the shots, baby. Take the shots. Yes. That's what we like to see it. Get excited when them analysis play out. Make it feel good and warm and fuzzy all over. So yeah, like I don't trade UJ, but if I would have came back to the charts and I would have saw this, I would have got in. I would have got in. Yeah, because, I mean, if you took the time to analyze the charts and you know you've been watching the market and you know you on your game and you know your level's been hitting and you mark it up every time the same way, you got no choice but to take that trade. You got to. You got to. So pushing into resistance on NZD USD. If we break up out, we got the next daily resistance way up there. Good little ways away. About 90. Yeah, so it's just, trading price action, I feel like will definitely take you where you want to be. Way more than any indicator, any of that other stuff. You just gotta stick to your rules when it comes to price action. Rules will take you where you want to be. Because if this price action start to fail, it don't break above that high, then potentially catch a retest. You got liquidity starting to build right up under here. So you definitely could see a liquidity grab come back down. Price fell from right there. Could be a liquidity grab before price push back up. Or it just could keep bullish. Potentially that's what could happen. Because last time we pushed into this level, we melted. We pushed all the way back down here. We back at that same spot. It could come all the way back down there. And then as you learn how to identify the candles, is what's going to take you there. So because price action is pushing bullish into the zone and still making higher highs and higher lows, one of the things I would look for is that at any point while I'm sitting here looking at this chart up until 11 o'clock, that we start making lower lows and lower highs. At that point, this bullish trend will be over. So that's how I know from pushing into this resistance, as we push into this level, if we push up, no matter how far it pushes up, If it comes up and it comes back down and start breaking through supports, the trend potentially could be getting ready to shift bearish. And then, as you know, you got the liquidity right here, so that builds that story even more to say price could come back down one more time and grab this liquidity before it pushes back up. So that's how you would frame. That's how I would frame the shorts to say, okay, keep in the back of the mind, don't over leverage, don't risk too much right here because we still got the opportunity to potentially push all the way back down. And what we was looking for the beginning of the week, we was trying to see if this move right here, based off the weekend analysis, was it just a liquidity grab or was price action going to go back bullish? Now, let me do this and do that. And then we got 3 minutes. From the weekend analysis, this is what we look like. We didn't have the price action yet. And remember, we were looking to see if this was a liquidity grab to push price lower or if we was going to push back into the zone and break out and continue bullish. So now price is way back over here. Now we back to see. Are we, was this just a liquidity grab to push price lower and we coming back to grab the rest of the orders and push it even more, even lower? Or are we going to break this zone now and push up higher and fill this range right here? Take that bar replay off. And you see what potentially is going to happen. And then that's why I have this zone marked as a continuation buy zone, because if I'm looking for continuation buys, I know I need to see price push above, pull back and stay above this level at 69 or 62,730, and then push back higher. Yeah, it is right here, 62, whatever, anywhere in this zone, 62,700 from 62,700 to 62,800. Anywhere in there, stay above there, and potentially we could go back bullish. UJ, let's see, gold. What do we have on gold? Gold played all the way out. It pulled back a little bit more, but what you can notice from going to all these charts, you know you are ready to go back bullish or resume back bullish, and it's time to take the buy. Once the price action shifts, as you see from this point, we were coming down, we're bearish, we're making high, low, lower high, lower low, lower high somewhere over here, lower low. But once you come over here, at this point, we pushed bullish, we closed above the level that pushed us down into support. Potentially you had to wait. If you wasn't on your game and waiting for this level to get hit to go bullish, you'd have to wait till price came all the way up here, pulled back a little bit more, and then showed you that it was going to continue that bullish trend. And then right up in here anywhere would have been a good time to get in to potentially retest this 4-hour resistance. But that would have been tough and tricky to get in because the range is so short. But like I said, if you were knowing that gold was already bullish, this was the support created earlier. As you can see, price pushed up from there, created the high. We retraced, created lower lows and lower highs all the way back into that resistance. And then once it shifts on the lower time frames, then you know, you put it together with the higher time frames, you're in there like swimwear. So like on those Nas trades, when you see it take off big bullets like that, and then it start to stall out, and start to create those small little pauses in the market, push bullish, went bearish, push bullish, start to identify some of those levels. And then as you can see, if you just put a box around here and drug it to the right, price action came back and found support right there, pushed all the way down, found support again, and it took off. So as you start to grow within your trading journey, you say, okay, well, this was a support from right over here. I'm going to just sit back and just watch. I ain't going to trade it. I'm going to just see what it do when it come back to that level. And then you sit back and watching the charts, whether you put alert on it or if you just, line it up something like this before it gets there and just kind of target a 4-hour high. Say, okay, I'm going to put stops below the support and just see what happens. And then when you come back to the chart, you're like, okay, it played out. Oh, got me again. Let me see. Got me again. I need to go back to AU too. Yeah, anybody watching on the tube, if you trying to come through and get on the Zoom, just drop a comment. Let me know, and we can get active. But it gotta be real. Yeah, you gotta be really, really trying to get on this trading, because This right here be real life, my friend. There's no play. We trying to learn and grow. And grow some more.
Recording in progress.
Thank you, baby. Same link. Yeah. Yes, Lord. So I want to see what you doing. Okay, so it look like my trade is about to smash TP. Get some bing bing. 15. The trade I was in from earlier hitting TP. Get ready to hit TP. Come on. Oh, it already hit. Let me check and see if it took me out. Ooh, I don't know. Hold on 1 second. Oh yeah, okay, it took me out. Yeah. Wait, hold on. What happened? Let me see. Yeah, I'm out of the trade, but let's see where it's gonna go. The continuation is something serious. I only think we're gonna get the liquidity grab though. I don't know if we're gonna get the continuation. I think the London session is gonna do the continuation. Or potentially do a reversal. I don't know. We're gonna see though. It's pushing right now. You wanna look at anything?
I don't even know where to begin. Like, I don't know what I should be working on. I mean, I'll do some more back testing, but
Right. I feel like the biggest thing, once you have like the foundational lingo down, like lower lows, lower highs, you know where the market's going. If we trending or not, consolidation, you kind of understand and identify that. You know, like what all that stuff means. Once you get to that point, I think you necessarily, you know, just come to the chart and start identifying levels. I know, like I said, on the 4-hour chart, I know we bullish because we're making higher lows and higher highs. The market value is continuing to increase. So the key important thing is to now zoom in on the charts and say, okay, well, I know from a higher time frame perspective, we're pushing bullish. Where is the last potential area that we pushed big bullish, which is right down here at this 4-hour support. So now I know, and this is a support because price action pushed bullish, then we're bearish, then we're bullish, then we're bearish. This candle was able to push this far down in the market. The very next candle pushed right back up and was bullish. So at this point, now your support is established from here. On the 4-hour chart, you just pushed up and made a new high. So at this point, you know if on the higher time frame you just created a new high, price action can do either two things from right here, or potentially three, but normally it's going to be two. It's only going to continue to push bullish, or it's going to retrace from. It's going to retrace back to the point where it just took off from. You start to learn and identify that the further it push away from where it just took off from, the higher probability that it's going to pull back down to where it came from before it continues to go back bullish. So as you start to frame and identify your levels, identify what's going on within the market, we're pushing bullish from the higher time frames. We created a support and we created a higher high. Once you bring the analysis back and you align your analysis or however you identify your levels with what you just said, then you can sit back and wait and see which how price action plays out for you. On the 4-hour, I have not, or price action hasn't created a bullish close yet, so I can't identify my 4-hour high. So I would bump down to my hourly and see has the candle closed bearish yet. And what I can see is then this is where it gets a little tricky because you have to remember that this is only a 1-hour time frame resistance. So it's not as strong as a potential 4-hour time frame support or resistance. So I would still identify this level as the resistance because this candle is bullish and that candle closed bearish. And then from there, what I would look to see is price action getting ready to retrace even deeper from this level, or is it going to continue bullish? And the next way I identify that is to go down to the lower time frames. What is the price action doing on the lower time frames? Is it making lower lows and lower highs, or is it making higher highs and higher lows? At this point, you got the high, you got a low. If we were going to make a new higher high, price action would be going this way. Or, as it comes back down to the 15-minute support, it would resume back bullish. But at this point, you got a high, low, potential lower high to push price lower. So as you build that story from the higher time frames being bullish, created the high on the 4-hour chart, and now price action is retracing, you sit and you wait and see which level is going to be the best level that price action could pull back into. One of the things I learned to identify was the structure most recently broken. So the high that was most recently broken on the higher time frame could be a high chance that price action comes back to. Or if you want to mark where on the 15-minute chart where price action created resistance before, see if it comes back to there. So now, at this point, you'll be in the waiting game and you have to sit and see what price action is going to do for you. This will be the 15-minute entry, and then this will be the level price action just recently broke. So we would look like that. And then now I know I got my 4-hour resistance. I got my 1-hour high. I could go back and mark or see if I can find a 1-hour low, which would be this area right up in here. So this area is starting to build a picture of. It has a chance of price action being attracted to, simply because it's the level that was most recently broken, and it's the level that created the support within the market. So price action might be attracted to that level, so it might pull back to that level. So in the beginning, until you really learn and dial in your pair, this is one of the things you kind of have to go through for a long amount of time until you identify and say, okay, I knew off my 4-hour from what I've seen in the past, price action just created a high. So what I'm gonna do now, based off of experience and based off me watching the market, I'm gonna throw on my fibs and I'm gonna see which level it potentially could pull back, or I'm gonna just base it off of the structure because I know it reacts off structure better than it reacts off fibs, or reacts off fibs better than it reacts off structure. So I feel like from top down, from learning the basics all the way to being a experienced and good trader, I think that's the process you should try to look to go through and see what type of results you come out with. It doesn't have to be exactly in that order or be exactly the same, but eventually you'll see that the longer you stayed on that chart, the longer you identified those levels specifically, and the longer you started to remember what time and what session price action did what, then the easier it'll be for you to look at the charts and just be like, okay, I know what price action is about to do. Like I was able to do on AU. Like this trade right here from the New York session, just now hit TP in the Asian session. And yeah, it's just taking one day at a time. Don't try to rush it. If you feel like you really want to make some money, get you a demo account, open up that demo account and trade it. I will tell you, trading a demo account would be a lot different than trading a real account because you won't feel the same emotions. When you trade in fake money, you just be like, I can see what it's going to do. But by trading that fake money, it will allow you to develop your strategy. Trading your real money will then bring into the emotions and the nervousness. But by the time you start to switch over to your real money, then you know, because of how you traded on demo and because of how you have learned to identify your levels, identify the structure, and identify what the market is doing, that you have confidence now that you're trading your live money and you can have a good success rate. So I think time, just take the time, just let it come to you. Mark up your levels like you was marking up this morning. Look at the charts around the same time like you did this morning, and then go from there. continue to build that story. I know in the higher time frames we could have been pulling back. On the lower time frames, it looked like we pulling back. So I'm waiting for the pullback to be over. Then I'm gonna go with which way the trend going. And right now, what I can see on AU is we pushing up, but we stalling out at this 4-hour resistance. So potentially there could be a pullback coming. And what I'm gonna look for is first the level that price action just broke above. It closed above here. So I'm looking to see if the price stall out right here. If it don't, then my eyes will be alerted to this 15-minute resistance. If I can drag it over. Come on. My eyes will be alerted to this 15-minute resistance. If we break through there, then I'm coming all the way back down and bring my eyes to this 1-hour support. At this point, the fibs don't matter. The way I use it, I wouldn't line any trade up with the fibs right now because we already pulled back to where I wanted to see it pull back and push bullish. And we shifted structure on the hourly bullish. So I'm more in favor of the buys. I just got to find the perfect zone from where to take the buys, either up here or from down here. And I know if I got to come all the way down here, then I'll probably be waiting until the morning time.
And if you do end up buying down here, you're shooting for it to go all the way back up.
Yep. That would be the idea. Now, if it start to fake out and start to fail, then I would know to get out. But if it don't, then I would be looking all the way back up here. 66 pips. Because that's the next resistance, or the resistance I would want to see it hit on a higher time frame. So you break the chart, take the analysis off. You see, you just pushed above, you pull back, and now you're trying to see if you're gonna continue or if you're gonna pull back again and then continue. So this level right here is critically important to determine what's about to pop off. Oh. I tried to sneak some pips in on the back end. It didn't work out. I'm going to go ahead and get out before it falls some more. Because it definitely don't look like they want to keep pushing it. See, the way I look at it, I kind of like make it a little bit more animated. You know, running out of gas, tire went flat or something on the side of the road, trying to breathe, just ran 3 miles. You know, this the 3 miles he running, and I try to keep myself entertained with it so I don't get bored with it. Tell myself little stories so I be, stay in the right mind frame. Because just looking at these candles produce all slow and stuff, it drive you nuts. Crazy noise. Yeah. Let's see if we can identify the Asian high at this point. Potentially. Yep.
So what do you do? So for example, if you went into that buy all the way at the bottom and it went up, but it doesn't break structure, what does that mean? Like, what do you interpret that as?
What you mean? So if I would have came from here and then it didn't break structure here,
Yeah,
that it was coming back down because it's a resistance.
like a reversal trend?
No, not a trend reversal, but just that it had the potential to come back down. So like, okay, price action is bearish, push bullish, created the resistance, push bearish. It came back here once, and then look what happened immediately after that. It just melted. So potentially, if we came up here and we didn't break the structure, then potentially it was going to melt again and keep going bearish and come all the way back to the 4-hour support. So then, as it would have came back to the 4-hour support, I would have been doing the same thing I'm doing over here, waiting for that trend to shift on the 15-minute and then get up out of there.
So as it breaks structure, so if it's breaking structure, then you kind of just expect a little retracement and it's going to continue to go back up.
Yes.
But if it doesn't break structure, it's kind of like you need to watch and see what happens.
Right, because it could just be a retrace. It could be a retest.
Okay.
So when you hit, come right here. All right, so when you hit that bar replay and you open it up, at this point from this London high to this London low, you're creating bearish structure. Even though the trend might be bullish from the higher time frame, but on the lower time frame, this is the 1 hour, you're creating bearish structure. So I'm gonna hit you on the 15-minute. You still creating bearish structure with the high, low, lower high, lower low, potential lower high, push the market lower. So you know that as prices come back into this level, if we don't break above the highs, then this could be a potential another lower high to push the market lower. So when you are watching it live and your heart get to thumping because you entered the trade from way down there and it's still bearish, at this point we haven't shifted the structure to bullish. But I knew because I was looking for it from back over here, and I got this reaction back over here, that I had a good chance of it still going bearish, still going bullish. So now at this point, we have shifted the trend on the 15-minute chart from bearish to now creating a high, higher low. Let me move these out the way so you can see it good. Grayson. You create the high, the higher low, and now you're creating a higher high. So potentially I should be waiting for price action to come back down one more time and then take the buy, but I was in from back over here. So yeah. And then as it came up, now you seeing this, like, you know, in the back of your mind, you know, from back over here, it melted. So you have to wait for price action to play out and see what happens right here. So that's why as we came to this level towards the end of the NY session, I took profits on some of the other positions I was in and only left one runner, because if it would have melted, then I only had the one trade gets trailed in profits versus all three of them, or all however many positions I had open. So then it starts coming back, and then it finally breaks above, and you get back to where we at tonight. So if it would not have broke above there, then tonight, as we came to the Asian session, I would say, okay, well, there's a high potential for us to still melt from right up here, because that's what we did looking left. So now that we got that Asian high, we know what comes next. We need to see the production of that Asian low, and then we can make a decision from there. Now, on the 15-minute time frame, this would be potentially a liquidity grab if this candle continues bearish. Which I think it is going to do. 12 minutes left. Yes, I mean, at this point, we got some tricky price action. And what I have been noticing lately is watching just the Asian session, it has been coming in to where we are opening the Asian session right at a major high point or right at a major low point. So it's been crucial trying to make some decisions, because it could continue bullish or it could continue bearish. So at this point, you definitely have to have your patience game on 100, because, you know, catch you a fake out here left and right, and then next thing you know, you're like, oh man, I knew I should have went the other way with it. So, you know, I got cooked right over here with that. I hopped in early because I started to see I hopped down to the 1 minute time frame, and I started to see it continue to make higher highs and higher lows. I was in there, and then news came out, and straight to the bottom. I was sick. But because I knew price action was going to come back, I took some buys and made probably about half of it back. I was a little nervous to continue, but yeah. And then, you know, you come on to the next day and you get some winners. Winner, chicken dinner. Yeah, just sitting at a waiting point now. Let's see what we gonna do. And then another thing I kind of try to teach myself is, if you're at a waiting point, watch it from the 1 hour chart, so you don't get faked out watching them small time frame movements. Because they will get in your head eventually. As long as you keep watching, you be like, oh, that's it. That's what I need to see. Nope. Nope. Higher time frame will always send you in the better directions than the lower time frames. But the lower time frames can show you the start or the finish of a move quicker than the high time frames will.
So I just use the
That's cool.
instead of
Yeah, that's cool.
that. I just use the 4 hour.
Yeah, dude. I'll mark the extreme highs and the extreme lows, and then go from there. Because you would know you would if the trend is bullish. If you only mark up your 4 hour or start from the 4 hour chart, if the trend is bullish, and you mark your extreme highs and your extreme lows, you know at this point if we break the high, we're continuing with that bullish structure, so we have a higher chance of taking buys as the price continues to move higher. If we come down here to go lower, then potentially that bullish trend you've been in is probably starting to be over, and you potentially getting ready to see a reversal in the market. So then you can start expecting the lower lows and lower highs back to the downside. So if you want to mark about the 4 hour, that's real. That's real good. That's yeah. That's easy. It makes that story that you're trying to build a little bit shorter. Um, it makes it a little bit stronger coming from a higher time frame, weekly, daily. But if you only want to stick to the 4 hour and going down, that's real cool, real easy. Yeah, I think this is gonna pull back, and then right up in here somewhere gonna be the perfect entry. Just gotta be patient. Don't get the hot hands.
That's what I had today.
The hot hands. Yeah, I'm telling you, looking at them charts, them numbers start looking good. You like, ooh, I'm in. Next thing you
I
know,
lost, so I'm
yeah.
trying to revenge
See,
that.
and that's that right there is the quicker you can identify revenge trading and trying to get into the market to make don't do that. If you lost, set your rules up. I only want to see 2 losses, 3 losses. That is going to save your account. That's going to keep you in the game longer. Even though you lost today, just like I got smoked right over here. Even though I lost right here after I had a couple wins, even though I got smoked right here, I had no losses over here. So, accept those losses, be brave, be woman enough to be like, I put those trades in, it wasn't nobody's fault but mine. I just gotta move on and wait for the next opportunity, and then just you gotta be ready and have confidence.
Najee keeps saying trust the what is it? It's like trust the charts. Like if you mark it
Daddy,
up and
Yeah.
it looks right, just
who
trust the
is
chart.
Oh
that?
yeah. Most definitely.
But I don't know. If it just looks like it's not going my way, I'm like, okay, let me just jump out now rather than losing my stop loss money.
And and that's another learning step in the path of going to be a better trader. Yeah, if so, the way I set my stop losses is, if price was to come down here and I was going to get in, I know I'm wrong. If price has to just continue to go this way, if we continue to come back down to this 1 hour support, I'm wrong. So I want to be out that trade immediately and then come down here and wait instead of letting this run all the way here and having heart attacks, multiple heart attacks that just keep coming down and just keep sinking and just keep losing money. So you lost maybe $10, $50 right here versus $500, $600 down here. You lost maybe 20 cents, 30 cents right up here versus $3 and $4 on a $50 account, $5, $10. So that in the long run it makes a big difference. Get out the
What
trades.
makes it horrible is when it doesn't even touch the stop loss. Like you're seeing price go right back up, and you could have made a lot of money,
Yeah,
but
and
you still
right,
lose.
right, and that's a part of building that confidence, building that ability to hold those trades. It comes, it builds up, and then one day you are gonna be like, you know what, I'm holding, I ain't closing nothing, and then it gonna take off. It gonna be exactly what you thought it was, and then your whole world gonna change. You gonna be like, oh, okay. So if I do that right there every time I'm holding, I marked it up right. We in there. The key thing is marking it the same way though, and then like your brother said, trusting what you marked up the same way every time. You won with it last time. I'm doing it the same exact way next time. And you also have to remember that every time it don't work out. So like I said, when I took these losses over here, I was like, okay, well every time it ain't gonna work out. But I knew at some point when that support built up, I was gonna get active on buys. I wasn't gonna hesitate. I was gonna execute immediately, and I wasn't gonna second guess it. Yeah. What time is it? We got 20 minutes left in this 8 o'clock candle. 9 o'clock. 9 o'clock coming. What we know about the 9 o'clock candle. 9 o'clock candle is the opening of a new 4 hour candle. The previous 4 hour candle, it has been pushing bullish, but we are pushing into resistance. So 9 o'clock candle could definitely provide a retracement. We got support right here on the lower time frames, and then the next support is way down here on the higher time frames. Let me bring that. Let me see, 15 minutes. Yep.
Don't you feel like you have to rush to get in the trade? I feel like the candles are moving so fast. Sometimes you have to like hurry up and get in before I miss my entry point and stuff.
In the beginning, yes, it mostly came from not having levels marked up previously. So if I came to the charts and it was naked, and I seen we was pushing bullish, but I really didn't pay attention to this resistance, I'd be like, okay, we got a big bullish, we about to go, I'm in. But since I got my analysis on the chart already, I already know, oh, this black box gonna alert my eyes and say, you pushing, you buying right into resistance. Why not wait for a retracement? Because it could retrace or it could just go bearish, but by getting in right here, impulsively, you just wasted money because you pushing into resistance anyway.
I was gonna ask about that. So there's not always a retracement, right?
Say
So
again?
if you don't get in, there's not always a retracement. So if you don't get in, so if you get in and there's a retracement, it's just gonna go right back up to where you were anyway. Whereas if you don't get in and you're waiting for the retracement and it doesn't happen, you just missed your entry, right?
Right? But then once that happens, so like right over here, if you wasn't at the charts and it was able to catch any of this, what you do is, like I said, wait for that resistance to build or that support to build, or wait for it to come all the way back down where it took off from. Yeah, I don't mind seeing stuff like this. I like it when I see this because I already know what to look for then. When the price action's like this, then I sometimes might have to guess. When I done seen this right here happen, I know. Wait for a support to build. First thing I would,
What happens after something like that?
what, this right here?
Yeah.
It's gonna pull back. The further price action pulls, wait, what the hell going on? The further price action pulls away from a zone like this, oh, you already know it's coming back. It's not just gonna continue. Even when you scrunch up the charts, at no point in time, come on, does it ever just go in one direction or the other. It don't ever just go straight down or straight up. You know, the big times you push up, you know it's coming back. It push up a lot, you know it's coming back. All this right here is the pullback. All this price action right here, yeah, it's a big pullback, and it look like a potential trend reversal because of how much it's going bearish. But overall, it's a retracement of where price action just took off from. Let me do this smart way. So I'm gonna highlight and zoom in on all this. Okay. So price action took off, it retraced, it took off, it retraced, it took off, came back, took off all the way up there. All this is the retracement, all the way back to where it took off from. Not exactly to the bottom, but all the way back down. In this situation up here, you pulled up, you came all the way back down to the bottom, but you didn't have enough to continue to go bullish, and then it broke. So at this point, this is where market experience come in and say, okay, well, I know if we come back from this move to where I entered, put stops right below, and see if the market take off. If you put that same strategy right over here, enter right up here, put stops right below, and then you potentially once you saw price action start to build bear structure, then you could have got out early, or you could have just let your stops get hit way down here because you're no longer pushing bullish structure right here anymore. So as an experienced trader, your eyes should say, okay, we came down to where I wanted to get in at. My stops are below here. This is where I wanted to get in at, but at this point, we didn't push back above any highs looking left. We came up halfway, and then we started creating bear structure, low, lower high, lower low, lower high. So then at this point, your stops would have been hit, but you had a chance right here to get out, and you had a chance right there to get out. Just cut. Yeah. You gotta be willing to accept what price action is giving you versus trying to force something. So back over, like I said, back over with this trade, if price action would have started out just creating and start come back bearish, yeah, I had the trailing stops right up under that level. So I would have been out right up under there from way down here. And I was okay with that because I know there's a chance for it to pull back because of how far it's pulled away on the lower time frames. And now that we've come into the Asian session and we've continued to pull far away from the zone, there's a higher chance for it to pull back to that zone. Just like this move, I think this has a higher potential to come all the way back down before it eventually pushes way up there. Let's see. We could be potentially getting ready to start a shift structure on the 5 minute and 1 minute. 5 minute looks really, really funky. So at this point, I would not be interested in anything. Let's see what the 1 minute look like. Alright, so all the way from the Asian Open, we're making higher highs and higher lows. We had a pullback with a new high, with a higher low, higher high, higher low, higher high, boom. The market broke below the bullish structure on a 1 minute time frame. So now, if I was in buys from down here and I saw this happen, I'd be cautious to say this is going to continue bullish. And now, at this point, you made a low. This potentially could be a lower high. It's not established as a lower high yet because it hasn't broken the low. So at this point, if this market continues to make lower highs and lower lows, then this little bullish trend on the 1 minute, since the Asian session is open, is now over. So when I go back to the higher time frames and see what's going on up there, I look and see, okay, well, we pushed back into 4-hour resistance and we're starting to reject, and we saw price action starting to shift on the 1 hour, on the 1 minute time frame going bearish. So potentially that retracement is soon to come, and the 9 o'clock candle is getting ready to open, which we know the 9 o'clock candle likes to pull back. Yeah, that could be the game to wait for. So here's where it happened last night. Here's an 8 o'clock candle right here, this gray one. 9 o'clock candle, it's a retracement candle, and it went higher. If you go back in over here, your 8 o'clock candle, we were pushing bullish. 9 o'clock candle, retracement candle, pull back, go over here. This is your 8 o'clock candle, and in this instance, price action continued with the 9 o'clock candle, but then you got the retracement after that. So, you know, learning your charts and what price action does right here. You got the 8 o'clock candle, this gray one, the 9 o'clock candle, retracement, and continue. So as price action comes to where we at now, it's 8 o'clock here. We were bullish, mostly expecting this to pull back. So that's why I'm more patient tonight to take a short from down here or from down here than I would be to be like, okay, it's ready, it's ready. Nope, it went a little bit higher. Oh, damn. Okay, well, now, you know, let's just wait and see what happens.
So the NAS 100. Based off. Oh, yeah, you're right. It did do that. So where it went up real quick, it eventually came back down. Like, I never noticed that. That's crazy.
Yeah.
I never noticed that it does it right away.
Sometimes it does. Like this one. So on the 1 hour chart, this move hasn't completely finished yet. So this is where it started. We're way up here. So once it comes back here, then that one would be complete. And then at that time, we would determine, are we going to continue bullish or go bearish? Yeah, but then on the smaller time frames, it happens a lot quicker. You're right. If it breaks way zone. So that's why I'm more looking for these shorts to pop off, because we pulling away from that zone where the move started from. And at this point, we starting out to continue to push higher. See, like all back in here, we had no issues. Price wanted to go up, it was going up. But now all of a sudden, come over here and you get some funky bearish candle with a long wick. Price action don't want to go up. So like, do I really want to take those buys? Is it really still pushing like it was pushing? Back over here, it was just going, breathing. You get over here, now all of a sudden, you know, you coughing like you smoke cigarettes. You know what I'm saying? You don't want to keep going. What's going on? What are we going to do? So, yeah. There's a lot of small inside, you know, details that I've picked up over the years. What's up, buddy?
Let's watch some TV.
What?
Can I watch some TV in here?
No, you have to watch in the other room, buddy.
No.
I'm almost finished. I only got 10 minutes left, and then you can watch it, okay?
How about you can turn the TV down?
Turn the TV down?
Yeah.
Yeah, where the remote at?
I don't know.
Well, if you find the remote, I can make it work. I think it's over there. Look over there.
Okay.
But, yeah, looking at these, like in the beginning, I was addicted. Like I needed some counseling, I feel like, because you couldn't pull me away from the charts. Like every day, every night, every weekend. Yeah.
Hey.
I was addicted. I wasn't coming off of nobody. I didn't care what nobody said. I didn't go nowhere. I I didn't do nothing
I
else.
want the bad one and you turn it down.
You want the what?
I want the bad and you turn it down.
The what?
The bear.
The Bears?
Yeah, with the blue guys.
Bears with the blue guy. Is that on Netflix or YouTube?
It's on that one.
What color is it?
Red and black.
Red and black. Okay, hold on. This one?
Yeah.
Okay.
Wait, I know. Go back. I just saw that.
What is it?
I
Right here?
saw it. The bear. Right there.
Right here?
Yeah. That's the one.
Okay, hold on. I'm running out of time on my stream, boy.
Okay.
But yeah, I was addicted to the charts. I couldn't get away because I was watching so many videos. I was researching so much stuff. I was trying to make money when I was losing money, so I was getting frustrated. And I was like using revenge trading, hopping in when I shouldn't get in, getting out when I should have stayed in, and all type of stuff. So yeah. Oh yeah, I went through all that. Hold on, let me get this fixed here. I'll be. My, I had to get my man's
I'm
right.
freezing.
Freezing, we'll get up under the covers, bro.
Okay.
But yeah, I don't know what this is gonna do. It's pump faking right now. And then you was looking at knives on the 15 minute. Let's see what we get. Bunch of nothing.
Except what you said, it has to go down.
Yeah. I would wait for the retracement. If it don't have to go down, it can continue bullish from here. But if I wanted to trade, I would want to wait for a retracement for it to come back down. Just because it's pulling away so far from this zone. Yeah, we still waiting on. It ain't 9 o'clock yet, so we still waiting to see if this candle close bearish, then we can identify that 4-hour high, and then the best play I would do is wait for the field play or wait for the structure right down here. The field play will come first though, just because of price action will get there first. I will see how price action reacts to 38.2 to 50, and then if it breaks through there, we got the supports. But like I said, in the agent session, I don't know if this have any gas to even make it all the way down there. Probably in London.
Yeah, I doubt it. It's probably not later.
And just consolidate. And that is how you save your money, right there. I doubt it. I think it's just gonna consolidate. Okay, well I ain't got no trade. I'm just gonna sit and wait. Yeah. Let's see what S&P got going. Same thing, consolidating. Yeah, broke above that 1 hour resistance, came back to retest. Boom, up out of there. Up out of there. Yeah. And then just the little things you'll start to identify. Liquidity starts to build under those levels. Come to grab that liquidity and retrace. Push the market higher.
So, but it hasn't come down yet to grab this liquidity.
The liquidity right under here.
Yeah, that one either. So the one at the bottom.
This one here?
With the curve that you have.
This one here?
Going to the right of it. That bottom there.
Well, what I was looking at as far as liquidity is this bottom here and this bottom together right here. There's a lot of stop losses right up under there from people who are buying going up over here. So if we do get a liquidity grab down here, I would expect it to be like a big wick down into this level versus candles down into this level, because at that point, if you starting to get way back down here with candles, you shifting the structure. You closing below support that pushed you into the highs. So I would be starting to look for shorts more than I would look for the buys.
hurry up.
Okay, buddy, I'm almost finished. But yeah, I'm about to hop off of here because AU ain't doing nothing and Nas ain't doing nothing. I really feel like this retracement coming though, so I'm gonna be on here till about 11. I just probably won't be live. So if you got any questions between now and 11, and just hop in the group chat and we can go from there. Oh, it done popped off. All right, YouTube, I'm about to slide off of here too. Thank you for watching. I appreciate you. Please hit that like button. YouTube like when you hit that like button, like you probably always hear all the time. But if you got any questions, drop a comment. If you try and get active with a boy, drop a comment. If you appreciate, just coming on here and just seeing how I analyze the chart, drop a comment and hit that like button. I'm out of there. Peace.